Good afternoon. This is Chris Brecher with the Central Room, the Simpler Chart Patterns Mastery Room, free video for August 9th, 2024. What's this about? Well, I decided to do this in the free room of sort of a bonus of buybacks and how it's an art, not a science. So I thought I'd go over that for a minute with everyone. So what am I talking about in here? Well, companies voluntarily don't buy back stock 5 weeks prior to earnings. It's called a buyback blackout. Now, so many get this wrong. What this means is it's voluntary, number one, not mandatory. But it has to do with legal reasons, because if Apple's buying back stock into the day of earnings and they're better than expected, it looks like insider trading. So usually they don't buy back stock 5 weeks prior to earnings. If you see, though, so many on internet, well, I call it internet, but Twitter or social media, they go and say that this, August 1st, that, Apple's going to get killed 5 weeks prior. So let's say that's the last week in June. Wrong. Look what Apple did. Apple went straight up, right to the day of the buyback blackout. Right there. Went straight up. So the buyback blackout does not mean markets are going down. The SPX went up, straight up as well. What it does mean, though, that if a bearish pattern develops when it's in its buyback blackout, then the bearish pattern is more likely to work. You'll see what we're talking about in here. So here, you had that beautiful bear flag on the right. You had a beautiful head and shoulders top right here. The probability of those working when they can't buy back stock goes up dramatically. Now you might say, well, there's a bear flag into earnings. Heck yeah, there's a bear flag into earnings. But you got to wait till the earnings. I mean, that's what we've seen a million times. And there's another thing. And I'm telling you, when you look at these, you got to combine more than one reason. So right here, what do you see? And we're going to go and take this on an hourly on the left as well, but I'm going to zoom out. And what I want you to see is that this bearish pattern, when it broke, didn't have any support. Then the bear flag here, when it broke, didn't have any support till here. And then what do you notice? A bear flag against support is not to be trusted. But here, you had lack of buybacks, and the bearish patterns are more likely to work. Now, that's the buyback blackout. The other buyback is companies are not allowed to buy back the last 10 minutes. The key in there, though, isn't that stocks go down the last 10 minutes. It's an art, not a science. That's something I've really tried to develop for everyone. If markets go straight up, like yesterday, you saw the ES straight up, right here. Then companies, that 1550 trade, we call them, where stocks get dumped at the last 10 minutes, is less likely to work. Why? Because that day, probably companies aren't buying back their stock because they let the ES and the NASDAQ futures and the arbitrageurs buy up the stocks on their own. They don't need to use up their capital, which is what happened. Those stocks refused to go lower. So let me show you a great example. Now, if it's a choppy market, yeah, it's going to work. So, I mean, it's more likely to work. If it's a bearish pattern in a choppy market, it's especially more likely to work. So let me give you, for instance, I'm going to take a non-24-hour SPX. I'm going to take it 2 days ago. 2 days ago, and I'll put a 5-minute chart. What you're going to see is yesterday, the markets were going straight up. But look at the day before. The day before, the markets were doing this. But on the other hand, there were certain stocks that refused to go lower. So let's go show you Apple on the right. So Apple on the right on a 5-minute chart. You're going to see net, the stock refused to go lower right here. Stock wasn't even close to a new low for the day. That's where it opened. So keep in mind over here, the SPX had already undercut its low. But Apple was way above its low. So just keep that in mind, what we're watching in there. What happened at the end of the day? Then it fell apart. How about Meta? Meta all day held up. All day held up. And on the close, it had a bull flag. Bull flags are much less likely to work in the last 10 minutes if the overall market's gone down. And they have big buybacks. Now, how about today? Why did we do a spread we made double on? Why did we make money in the XSP on the close? The reason we made money in here is because just from inspecting all the 1550 stocks, some went up, some went down. It was a push, and that's why we were able to make that money. So we did a butterfly and we doubled our money. Go into here. It's really exciting to do this. Let me see if I have it for you. Well, we took 28 stocks that have buybacks. And what happened is some of them at 1550 went down, some went straight up. Google went straight up. When Google went straight up, there was no way I thought markets would get crushed. Meta went straight up. So some of the buyback stocks went up. Apple, look what it did on one tick. I got nailed for a second. But I'm telling you, most of them half stayed up, half stayed down, and that's why I thought the reaction on the close would be muted. And that's what happened. So next week, if you start seeing a downdraft in the SPX, and let me show you Wednesday. Let me give you a perfect example. Here's Wednesday, and we're going to take the SPX. We're going to go back to Wednesday. Do you see that? Right there. That triangle right here. That was more likely to break because of the lack of buybacks. And that's exactly what happened. So a possible bearish formation and then a second bearish were much more likely to work if the market was choppy. So I hope that helps. Hope you can make some money off of that. Thanks so much for listening. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.